All right, take two. This is Mark Warner presenting for Mark Warner and Kathleen Simpson. We're going to go over our industry analysis and recommendations for Delta Airlines. So we're going to cover today is an introduction. We'll go over a brief history of the company, some of the an overview of the current situation of the company. So the external environment, so the general environment, the industrial environment, the 5 factors, and then some competitor analysis. After that, we'll jump into a brief overview of some of the internal components of the company, looking then at the key issues. We'll review some recommendations and some justifications behind that, and then jump into the implementation. So without further ado, we'll jump into the history of Delta Airlines. So Delta was established in September 1928, and they started out as a crop dusting company, and then used their expertise in that field and decided to jump into the commercial passenger flight. So from there they moved their headquarters towards Atlanta in 1941. So then over the many years between the 50s and late 60s, they started merging with some of the airlines, and they merged with Chicago Airlines, Southern Airlines, and Delaware Airlines during that time. So they started to grow in their the mid years. Then after the late 80s, they started to really drastically expand, and so they've done very well. They've grown their operations and strategic alliances, and the strategic alliance part, they've started growing recent years in the international space, and forming a lot of partnerships to enable them to join a lot of the routes in those spaces. And then during 2004 till about 2010, they were in a pretty significant economic recession, and as an effort to avoid or to overcome bankruptcy, they ended up merging with Northwest Airlines, a larger airline at the time. So got them to kind of the state that they're in today. So currently, CEO is Richard Anderson. He has done very well with Delta, and he will be retiring soon to be succeeded by Ed Bastian. And Ed and Richard both have had very significant roles at the company. They have been very successful. Both have been focused on really making Delta efficient, and making sure that their operations are as efficient as possible, but also expanding the company and looking for areas that they can grow. And so both have done a very good job of that. So today they currently are the largest domestic airline company. Again, they're also headquartered out of Atlanta, and Atlanta is the busiest airport in the world. And so they have some significant things going for them. They have been rated as Airline of the Year, 3 years in a row. And then they are also currently the fastest growing international airline. So a lot of significant things certainly in their favor. And so then when you see that they are second in market share in the domestic airlines, it does bring question to your mind. It seems like with all the positive things that they have going for them, that they would be number one in market share in the domestic airlines. And so it just shows that there is opportunity for improvement, and we'll discuss that as we go through this presentation. So first, external environment. So there's a lot of factors, of course, that we've reviewed as we've gone through the external environment of Delta. Starting with the general environment and looking at the economic factors. Just in terms of the airline industry, you see a lot of mergers and acquisitions in the space. And the companies, it's not always obvious the companies that are going to be merged. And so you look at recently, Alaska merged with Virgin Atlantic. Virgin America. So they merged, and Virgin certainly wasn't an airline that looked like it was ready for a merger. They looked like a pretty strong business. So you really don't know, based off of appearances, which organizations are going to have to be merged, and going through acquisitions, and a lot of it just to stay competitive in the industry. The industry does have low and no profit margins a lot of the time, and even as you can see from recent trends, negative profit margins. And so the airline industry it's certainly challenging in the economic, and then in addition to all that, very high fixed costs for each flight and every service that they provide. There's a lot of fixed costs, and the variable costs are very minimal. Based on the number of customers that travel, and so they have to have very high occupancy rates in order to overcome those fixed costs. And the social cultural, any international airline, they certainly have vast cultures that they have to take into consideration and figure out how they are going to market their airlines and market their the routes and things like that to the different cultural people that they're going to be integrating or interfacing with. And so Delta certainly is an international, very vast international network, and so that is one of the core things they have to consider. In terms of the values of the customers, the social values of the customers, very different values when you look at the people that are traveling on business or people that are traveling for personal reasons. And so what a business traveler might really highly value might be of no interest at all to the regular just person that's traveling to visit family or to go on vacation or things like that. In terms of global, there are some major impacts in the global space. So one, the Export-Import Bank, right? So for domestic airlines, their competitors, oftentimes if they're an international airline, are international airlines, right? And so anything that they view as a benefit to those international airlines is a negative impact to them. And so the Export-Import Bank offers financing to international airports or airlines as a means of allowing them to acquire export goods from the United States. In this case, we're talking about large airplanes. So Delta, they have advocated for and against the Export-Import Bank in its time, based off of whatever the priorities of the company were at that time. And then also internationally, there's every international site. There's a lot of regulatory agencies that govern that every airline that deals in international air travel has to deal with. In terms of the technological factors, there is always going to be technological advances in the airline industry. It's no different. So currently, the focus is certainly on fuel efficiency, right? And so with the recent scare, the oil prices going drastically higher, airlines were very impacted because it drives the cost of their fuel, which is one of their costs, major costs, drives it higher. Currently, it's not as much of an issue, but with the fluctuation, it's always good to have the most fuel efficient airplane that you possibly can. So that's one of the technological advances that these airline or airplane producers are focused on. In-flight services is also very big. So you look at the things that airlines are focusing on, such as streaming media, internet, providing internet, and different technological things like that. And then the airplane manufacturers, they're also provide a service for fleet management, for fleet maintenance management. So tools that airlines can use to manage the maintenance and to manage their fleet as a whole. These software tools, they can provide a lot of value and can streamline that process, which can drive additional operational efficiency, but of course it comes at a pretty significant cost. The political and the legal environment. So the lobbying is very commonplace in the airline domestic air travel area, and Delta certainly participates in that. As I mentioned with the Export-Import Bank, they were certainly lobbying Congress continuously around that issue, and so lobbying is very commonplace. Anything that they can do to affect regulations that make it easier for them to operate, or anything that they can do to make it more challenging for international competition to do business domestically. So, and then again, it's a very highly regulated arena. So there's the FAA and the TSA that govern travel and airworthiness, and the FAA has the ability to impose things like maintenance requirements where the company has to comply with the maintenance schedules or else they won't be able to fly. So FAA and TSA certainly provide a lot of legal considerations for companies operating in this space. In terms of demographics that these businesses have to focus on, there's a mix, of course, between business travelers and non-business travelers, with the majority of that being on the business side. Within business traveler segment, the typical population there is professional, managerial, and technical type positions, with 77% of those typically being male. So that's one demographic. But in the non-business travel, really, in terms of age demographic, you're not really looking at a specific age, whereas business traveler, you're typically looking at somebody between 20 and 44. And then the demographics for the gender, so 54% male and 46% female, so there's a pretty even split. And so in the non-business travel, you pretty much can market to the population of the United States, which can be challenging. In the business travel, you have specific things that you can market to in terms of demographics, but that doesn't necessarily make the business decision, so there's other factors that have to be evaluated there. In terms of the physical environment, really it gets down to the environment itself, and so the big focus there is on things like carbon emissions, right? So these airplanes, they fly all over the world. There's thousands of them in there at any given time, and each of them produce a pretty significant carbon footprint, and so airlines are consistently looking at ways to offset those carbon footprints. In some places it's a requirement where they have to do that with monetary means. In other places they do it through environmental programs to help improve the environment. The other thing that they're looking into to improve the physical space is biofuels, so looking for ways that they can improve the environment by using resources that are renewable. In terms of the 5 forces, the buying power of the buyers. So the buyers have pretty significant buying power in this industry, right? So airlines, what they're looking for is that loyal customer base that they return to over and over again. But customers, they have tools like the internet searches where they can quickly search across every option that's out there and find the best rates. And then in addition to that, they have these frequent flyer programs that are meant to build that loyalty, but oftentimes customers look at those as ways to get quick miles, and they can jump between those programs pretty readily, so that it doesn't instill loyalty, but instead customers will jump instead between programs. And so the way that airlines have to address that is, what's the way that we can ensure that the most people want to stay with us. Airlines that don't have loyalty programs are certainly even further behind, so you have to provide it. So, in terms of the buying power of the suppliers, there is a duopoly in terms of plane manufacturers, and so there's really only 2 options to buy those large planes from currently. There's more competition coming in the years out ahead, but currently just those 2 manufacturers, so they pretty much can set the prices that these airlines have to pay. Of course, those 2 companies do compete fiercely, and so that does drive the price down, but they certainly have the power over that. And then long-term purchasing. So when you do buy an airplane, it's not like you can walk up to a dealer and choose the one that you want and paint it and it's yours. You typically have to put in an order for them many years in advance. And so airplane manufacturers have order books, 2 and 3 years out into the future. So you're essentially making a purchase that is going to come into fruition many years in the future. So you're also, again, somewhat at the mercy of those suppliers for that. In terms of the threat of new entrants, fortunately for airlines, because of the low profit margins, it's not as attractive for airlines, and so you don't see a lot of new airlines springing up all over the place. And then also there's a significant number of bankruptcies and mergers, and so that also dissuades people from trying to join if they were able to come up with a significant amount of capital to either lease or buy some of the planes. In terms of substitute products, they do have some moderate threat in that area. So there are, boats, buses, cars, trains, all sorts of different mechanisms. And so airlines, what they have to consider is, how do we factor in that convenience versus the time savings? And that's really the key differentiator. And so if it's a small distance and not much time savings, really the only way that they'll be able to compete in that space is through cost. But if they're able to demonstrate the time savings differentiation, they're actually able to attract more customers that way.